Let's move on. Stick with earnings here. The chart master says something is about to happen next week that only has happened twice before. And if history is any lesson, it could spell some trouble for the market. Let's get to Cornerstone Macro's Carter Worth with more. Hey, Carter, nice to see you.
Likewise, nice to see you. Well, what it is, of course, is that we have the big companies, all five. They represent a huge chunk of the market, but it's fairly rare for them to report all in the same week. In fact, that's only happened 2 other times in their combined history, and both times the week following was not good for equities. But we've got a few slides here. Take a look. What we know is, of course, we kick off with Google, and then that's on Tuesday. Monday we get a reprieve, but Tuesday through Thursday, all five report, ending with Apple and Amazon on Thursday. And now what we know is that this basket of stocks, which was very concentrated before the market crashed in February and March, is now even more concentrated. If you look at the second slide here, we're up to almost 21% of the S&P, which is to say these five names are now the same size as the bottom 350. It was the bottom 250, then 325, and now really an incredible weighting. And so the issue is, if you look at the chart of this combined basket, you can see there that we are obviously well higher than we were at the peak of the dot-com era. Not to imply the valuations are different. We know that, and we know rates are different. But the concentration of capital is moral hazard, if you will. And then finally, just take a look at this small table here. 2 other times in history, in January, the week of January 26, 2015, and January 29th, 2018, this happened once before. All five reported, and then the week ahead, not good for equities. What we know is this wasn't a particularly good week for equities. Materials, industrials, a lot of the cyclical names down for a second week in a row, financials, and so much is dependent on these names, but more and more money is crowding, hiding there, if you will, and in my thinking, that continues to be a problem.
Carter, you mentioned the performance going into this critical week in the past of other sectors, but how about the tech sector and how it performed going into a critical week and how it compares with how we've performed this past week?
Well, if you think about the most recent one, of course, in 2018, in January, the whole market was spiking. In fact, that was one of the highest weekly RSI readings ever recorded at the time. And we have a similar circumstance, obviously having come from a crash, but the performance of tech, these names, whether you call Amazon tech or not, but the point is Facebook, these idiosyncratic super cap household generals, names that drive the market, they were performing well, both in 15 and in 18. And then, of course, the market did not do so well thereafter.
Okay. Carter, thank you. Carter Worth of Cornerstone Macro. Let's trade it. Jeff, I go to you first.
Yeah, so I tend to agree with Carter. You know, I talked about it with Microsoft, and I think it's true with all of those other names. There's a fair bit of optimism priced in. And I think if you just look at the way the market's behaving in general, is the market telling us that we're making some sort of cyclical bottom where the economy's going to recover? I don't think so. You know, I look at industry pairs like semiconductors versus softwares, banks versus REITs, consumer discretionary versus consumer staples. You don't see any cyclicality in those ratios. You still see investors paying up for safety. So I think ultimately that means the economy is still going to be troubled over a period of time. We had awful data this week. I don't think we've seen the bottom. So at some point, those very large names are going to have to be pulled down as the economy continues to struggle. Yes, they're absolutely positioned in a better way in most cases for this kind of environment. But I think overall, they're not completely impervious to the environment that we're in. A lot of optimism priced in. And again, the weight with the overall market, that is a point of risk going forward.
Tim, I'm curious, what do you think is more of a defensive stock right here, right now? A Procter & Gamble, let's say, or an Apple?
I think it's an Apple. I mean, I get why Procter & Gamble and particularly COVID-19 post, Procter is one where we understand the eat-at-home dynamic, et cetera. But, Jeff talked about the defensive nature of these stocks is such that I think that's really where money goes. And Apple, I realize, and Guy brought up the Goldman downgrade versus the JP Morgan upgrade, 16 times, 20 times. What's the multiple? But either way, relative to itself, the multiple's maybe not great. But look, Facebook, Google, I would argue Apple, some will argue Microsoft, me less so, are all valuations you don't have a difficult time buying with those balance sheets in this environment where, to me, it's almost more about credit. So I think those are the defensive stocks. I think they will remain defensive. And look, the Nasdaq's been above the 200-day for over 2 weeks now. The VIX is now sub 35. I mean, is that good or bad? These guys are saying you sell that. I'm telling you, I think we actually have a case where markets have calmed down a bit. And if anything, this is the marginal dollar. May not be good news overall because of the lack of breadth. And we've said this many times. Right. Carter brings this up. But those are the defensive stocks.
Guy, I'll give you some choices here. Of the big cap tech names reporting earnings
I like this game.
This coming week, which is the most defensive right now, in your view, or none of the above?
The most defensive out of the ones that report this week, in my opinion, typically I would say Google. This environment, I would say no. So I understand what Jeff Mills said before, and he's spot on. But if you made me pick, I'd say it's Microsoft, MSFT.
So Microsoft, even though I gave you the choice of none of the above.
Oh, I didn't hear that part. You know, technology is a funny thing. I'm not a none of the above guy. You know, I used to do that on the SATs, and it never seemed to work out for me. So
apparently not.